All right, let's begin with our analysis. All right, we're going to do the same thing that we always do. We highlight our areas for the previous week. That's the high and the low. So here is the low. It's a very interesting area for us to keep an eye on. And then we highlight the high. That's also a very interesting area for us to keep an eye on. All right, so we highlight the next area that we think price should hit, which is this low that was created. Right now, we should interpret what we think is happening in the market. All right, so what we are seeing right here is price reached a high and it rejected, right? And if price wanted to go higher, we should have seen price going higher on this area, but it didn't. Price fell. Now, as price fell, right, this could have been interpreted as a retest. As you can see, price came all the way down here, but failed to go lower. It pulled back up and created a new low. So now we have this low that was created in a higher low that was created, which could have pushed price all the way up. All right, we even see this in our previous weekly candle. As you can see, it closed bullish and strong, as you can see with our weekly candle. However, with this weekly candle, at the same time, the same interpretation we're having with this bearish candle is the same interpretation we can have with that weekly candle, as it went high also, but only reached an area where it could be seen as a retest, because this is an order block. The last bearish candle before price fell, last bearish candle, and price, as you can see with the opening of yesterday and today, price is rejected. Now, if price is rejected and even broke our previous week's low, that's very interesting in the terms of now we need to see how today is going to close. Today needs to close below our last week's low, and we know that the trend is changed. Price is trying to push lower, and then we can expect price to reach our next low. We have highlighted at this area, as you can see, our next low, as we have highlighted. Now, if this price does close below and it reaches the next low that we're expecting price to reach, it could go lower than that, because prices would have reached at least two supports, and price needs to break two supports or two resistances to change the trend. All right, so if price breaks it, we are no longer expecting to buy on gold. We are now looking for sell setups and where it might reach for us to buy the reversal, if there's going to be a reversal. So it's very interesting what's going on in the market right now, and this is the time for you to be taking advantage. Patience works, and yeah, just be careful. All right, so now we need to go on the daily time frame. On the daily time frame, that's where things get clearer. All right, so our zones are already safe. We don't need to add more zones around this area. What we can interpret is price came all the way up, rejected this area, right? Created a rejection area right here. We have a big, strong, this is what I like to call an engulfing candle. Why? Because it's engulfing 1, 2, 3 candlesticks, right? So for me, this is a very strong engulfing candle, and this can push price lower. As you can see with today's candle, it's already going lower. So if today's candle manages to close below this area, I think you can also see that price will want to go lower. It would definitely want to go lower, because it has broken an area where how many candles rejected to close? 1, 2, 3, 4, 5, 6. 6 candles rejected to close. So that becomes a new interesting area. And if you look to our left, we have clean traffic, right? So that's another advantage we have. And then if you look again, we have a wick. So price might want to complete this wick view, and if it reaches the low of this wick view, price might even reach the next low, which is the area that we are expecting price to reach. All right, so the trade setup is already on the daily time frame, and if you are not in this, you could probably catch it when price pulls back a little bit, or you can even catch it now, or you can wait for this daily candle to close. If this daily candle does not move as much as it seems like it will, we should, in closes somewhere around this area, then you also have a great entry. But the end, since price seems to be very bearish, we might find the entry on the lower time frames. So let's look at the 4-hour time frame. All right, on the 4-hour time frame, that's where things also pretty interesting and a little bit confusing. All right, so now if we look at the 4-hour time frame, we were given the trade, right? As you can see, this was yesterday's price action. If you missed the sell around this area, you would have caught the sell at this area. As you can see, price went up, it rejected and still closed bearish. So this was your signal to sell. So this is where you saw it, right? And then our next candle closed bearish and below. All right, so that's perfect, right? So someone might even be selling around this area. That's also fine. But price is rejecting to close below this week. As you can see, price has been there for quite some time, and the 1 hour is almost closing and it's still there. So why is price rejecting to close around this area? Because it should be rejecting to close around this area instead. Oh, it looks like it is rejecting to close around this area. So now we have a zone around this area. So now if you are not in the trade from there, from this area, right, you're just waiting for price to close below the previous 4-hour candle. So if a 1 hour candle is to close below the previous 4-hour candle, then you have your trade for the week fill and even reaching the low that we're expecting price to reach. Or if, as you can see, this candlestick is pushing higher, if it does come all the way for the retest, then you can also take advantage of the retest for price to go lower. All right, but this is the time to be even more careful, because if we go on the 1 hour time frame, let's go on the 1 hour time frame. If we go on the 1 hour time frame, this low is becoming very tricky in the area. As you can see, this is a very tricky area because price did try going lower, but it's rejecting. So if it's rejecting, what is it trying to do? Is it trying to come back up for a retest, or is it creating a high here for price to go lower? So this is the area where we have to keep a lot of thoughts open. We have to be open-minded and we have to be patient. So this is the time where you shouldn't be entering unnecessary trades. You should be waiting for price to give you the formation, because remember, if price has been creating bearish candles or bullish candles, if price has been creating bearish candles, it needs to create some sort of a bullish candle for it to go lower. If price has been creating bullish candles, it needs to create a bearish candle for it to go higher. As you can see, bullish, created some bearish candles, bullish, created some bearish candles, bullish, created a bearish candle, bullish. Same thing, it went down, you see a bullish candle, it went down, you see some bullish candles, it went down, you see some bullish candles, it went down. So probably it's creating some bullish candles for it to go down. It could be that. Or in other terms, what if this price was only coming back to retest this low? So this 4-hour candle that's printing right now needs to stay below this low. Then only then we can say price is going down. If it rejects to stay below this low, right, then price could go higher, could go back up and complete the bullishness, because our previous weekly candle closed bullish, and it closed as a very strong bullish candle. It's an inside candle. It rejected the low. The daily candles rejected the low. However, yesterday's candle took out all of that information. And if yesterday's candle took out all of this information, then price has already broken the previous day low, and the 4-hour candle is already closing below. That means price could be saying we are now going down. All right, so this is a very tricky area that you need to watch and be careful, right? Because you can always catch the trade at some point, as long as it's below and it has moved around this area. That means it's more likely to go back to that low. It's more likely to play around that area. So you can always take advantage of that. But for now, if you are going to be looking to take trades, I would say wait on the buys. You only enter buys when price has broken above this area right here, because this is the high that was created before price went down. That's when you can only enter buys. If price is still below here, you're looking for sell signals for price to go lower. Whatever it does, you're looking for sells for it to go lower. Unless if you're scalping and you see a buy setup, then you can. But I would say sell signals only. Wait for sell signals. Remember, market is all about finding the right opportunity that you can take advantage. You don't have to take every opportunity you see. Always take the ones that you think will give you the best profits. All right. So be careful, be patient, and we shall update each other when market is giving us more information.